Next concept is inventory valuation. It is also part of material or accounting for material. Inventory valuation includes three different methods, but two of the methods are followed by international reporting standard. First one is first in, first out, and the second one is ACCA method, which is also called weighted average. First in, first out means what? First in, first out is the one where we purchase a certain amount of units at the start of accounting period or at any point of time, and we will issue those units first. First in, first out means all those units which we purchased earlier will be issued earlier. So usually at the start of the accounting period, we have some inventory which is called opening stock or opening inventory, which was the closing inventory at the end of last accounting period. It could be the last month. So at the end of the last month, we have certain amount of units which is called closing inventory. It has now become opening inventory. So we will do what? We will use these opening inventory units first when we are going to issue units. So first in, first out means all those which we purchased earlier will be issued earlier. Assume that issues will be made from the oldest in the inventory. So oldest is what? Oldest is opening inventory, which was the closing inventory in the last accounting period. Leaving the latest purchases inventory and the last one which we have right now will be in the inventory. So that's why in an MCQ, examiner can ask that FIFO uses latest prices to value the closing inventory. So must remember this, latest prices are used by the FIFO whenever they are valuing the closing inventory. Next one is last in, first out. Last in, first out means all those units which we purchased now or in the recent past will be issued first. So we are issuing what? We are issuing our newest inventory first, and then we will issue the earliest inventory or earliest purchases. Basically, we are doing what? We are following the concept of a sale new variety at the beginning or new variety earlier. Whenever at the start of the season we are going to launch our products, we will sell new variety first, and it will give us high prices and high profit. And we can say that in this FIFO method, closing inventory is valued at what? Closing inventory is valued at earliest prices. So closing inventory is valued at earliest prices. Next one is ABCO. ABCO means what? Weighted average method. Weighted average methods are basically of two types. One is called periodic ABCO and the second one is called perpetual ABCO. Periodic ABCO means what? Periodic ABCO means we will calculate the average cost per unit at the end of accounting period, and all units are issued at that average cost per unit. Total cost of an item in the inventory divided by number of items in inventory is used to uh, calculate what? This formula is used to calculate average cost per unit. So if we are following periodic inventory level, we will follow this formula to calculate the average cost per unit. Takes account of relative quantity purchases at different prices in the cost per unit. But this is relevant, this statement is relevant with what? This statement is relevant with the periodic inventory level. This statement is not relevant with the perpetual. Perpetual AFCO is the one which says we will calculate average cost per unit whenever we are purchasing new purchases. So we have a certain amount of units like at the start of the accounting period, and we have their value. We purchase new units after 5 days. Now we will calculate new average cost per unit before the issuance of units. So this is called what? This is called perpetual AFCO. So here you need to understand or you need to memorize a few points relevant with the FIFO, LIFO, and ABCO or valuation of inventory. There are two concepts. One is called if prices are rising. Rising prices is also known as inflationary environment. If prices are rising, then the value of closing inventory is highest in FIFO. Whenever or wherever value of the closing inventory is high, it means profit is also highest in FIFO. If profit is highest, it means cost of sales or production cost will be lower. Under where, if prices are rising, it is called inflationary. So LIFO is opposite to FIFO. That's why its value of closing inventory will be lowest in LIFO. If it is lowest, what does it mean? It means its profit will be lowest as well. So profit is also lowest. If profit is lowest, cost of sales or production cost, PRO stands for production cost, will be highest. AVCO in between, AVCO will remain in between FIFO and LIFO. So if prices are rising, this will happen. Other situation is if prices are falling, then value of closing inventory will be lowest under FIFO. When closing inventory is lowest, profit is also lowest. Cost of sales or production cost will be highest. Whenever prices are falling, value of closing inventory under LIFO will be highest. Profit will be highest too under LIFO when prices are falling, and cost of sales and production cost will be lowest. Once again, AVCO will remain in between FIFO and LIFO. So don't forget the difference between rising and falling prices because it is asked by the examiner usually in actual exams.